So we had a call actually from an accountant, and their client had got a statutory demand for about 800,000. Now they tried to negotiate it. He'd had terrible compliance. I got the call at 4 o'clock on the day it was due to expire. And they said, can you get us a payment plan tonight? Because we haven't been able to do it and it's about to expire. Now we can't. I can't get a payment plan in an hour for an $800,000 debt. There's detailed applications, there's a whole process involved. Whereas if we'd come on board before even the statutory demand got issued, because to get issued, that debt's been around for a while, or even when the client originally received that notice, the outcome would be very, very different, rather than thinking it was an easy fix and potentially not using the right specialist. And we see the same with expired DPNs. Both the solutions that we can provide by getting a company into a payment arrangement, or if there is a possibility to avoid that personal liability when you jump in early compared to when it's expired.
Yeah. So we've recently had an experience where we've asked the ATO to consider a payment plan under a deed of company arrangement. They were very reticent to accept it, not because of the company's compliance, but because of the personal taxpayers' compliance. Are you seeing more where they're starting to look beyond the entity that they're dealing with and saying, how do you operate in its totality?
So sometimes if the director is linked, so if the two debts are linked, so there could be a personal liability that's come across from the company to the director, or in that case, if the director is left with the liability, then yes, we see the two together. But there also could be looking at the ongoing viability of the taxpayer. So as well as looking at the past compliance, so whether the debt's been growing, whether they've been paying on time, whether they've been dealing with it. Another issue that we're seeing a lot is, how is this payment plan going to be paid? With this individual, where is this money coming from? And is it a viable arrangement for either a viable company or an individual? And the ATO specifically said, and again, this doesn't fit with what people are hoping in the community. People say, well, wouldn't they rather $10 than no dollars? But what the ATO is saying is, we're drawing a line in the sand, that if this, whether it's an individual or a company, has incurred such a level of debt that we're not willing to take a risk that the debt will continue to increase, and we're drawing a line in the sand and we're stopping the debt now.
Yeah. And that's sort of some of the feedback that we're getting as well on most of the time the deals we're putting up are like, they've been viable businesses. They've gone through a little bit of a tough time, whether it be by, a combination of, lack of staffing, rising prices, industry disruption. Usually most of these things stemming off the back of, what we went through in 2020 and 2021. Definitely something that directors can think about is, when they are exposed to these sort of things, that there is an informal process called Safe Harbour for viable companies, which is sort of an invisible process whereby people get involved, including people like ourselves get involved, and help directors with plans to effectively take them through tough times and come out the other side to get a better result than what would have otherwise been available should there been a formal appointment, such as a voluntary administration or a liquidation. And that can be very helpful because, one, you can avoid brand damage, you can stay more viable, the directors stay in control of the business, but it also creates, and it gets them away from the threat of insolvent trading, because if they do it all correctly, then they can effectively trade whilst insolvent through that process, providing they've met a few criteria. And as part of that process, it's quite often helpful to get people like yourself involved, where they can negotiate out the personal exposures. They can also renegotiate the company tax debt into a proper payment plan, which all feeds into a plan. There might be some interest remittances at the end of the plan and things like that, and it all feeds in, which means that hopefully at some stage, 6 months, 12 months, 18 months time, there is no formal appointment. It never hits the press, never sees the light of day, and the directors have been able to do it with some level of impunity, away from the threat of insolvent trading that would come from a liquidation style scenario.
And I think that too touches on there are circumstances in which we've both been involved where you might be assisting the company with a liquidation and the company's going through the liquidation process, but that personal liability we were talking about has already gone across to the director and we jump in to get the director into a payment plan. So that is absolutely possible for a director to not go bankrupt, for them to be in a payment plan for the portion of the company's debt that they're personally liable for that's already come across, whilst you're dealing with the insolvency and the liquidation of the company.
Yeah, absolutely. And that's just, again, comes back to that, getting the advice piece from the right people, because,
Yeah.
if they're sitting down with me, I'm going to say, hey, this pen here, we can,
It's not a magic
it's not a
one.
magic wand, we can only fix a certain amount, but we can fix this. But hey, I can put you onto someone that can talk to you about your personal side. And that's, and if that was a culmination of, there might be two directors and one may have assets, one may not, in which case one may need to go through a formal solvency process such as bankruptcy or personal insolvency agreement, and the other one can negotiate their way out. So it's very much individual circumstances, and I guess we've said a lot, but we can't sort of reiterate enough that and early advice.
And again, it's one of the reasons why I like talking to different people and why we're doing a lot of these videos is because not everyone has the same access to that network. And we are fortunate in the businesses that we've built and the people that we've been around that we understand all the different advisors and the specialties, and we do have an amazing network. But it's to get that message out there when people aren't sleeping or they're stressed or they don't know where to go, that if they find the right people, then that's going to open them up to the right network to be able to help them.